They do on the quarterly. I am very bullish Halliburton. Now, of all the three stocks we're going to talk about today, this one has, I think, the strongest chance for upside, simply because it's really a secular bull story here. There's a massive, massive resurgence of energy exploration because governments across the world, I think, have changed policy away from just being purely green to understanding that energy now is as much a matter of national security as it is a matter of economic economic strength. And therefore, I think you're going to see for the next 2 or 3 years very, very strong flows into the energy sector. Halliburton is the primary beneficiary of that. So you got to love it just on a longer term basis, regardless of what kind of bumps in the roads they have on a quarterly basis.
Why? So would you be bullish on energy, Boris, even if the U.S. economy slows or is slowing quite significantly this year?
Well, as I said, you're going to have perhaps some cyclical slowdowns, but regardless, the longer-term investments into energy exploration are going to go, and it's not a story just here. It's going to be a story across the world. Plus, we really don't know, if China does come back online, the decline in U.S. demand could be offset by uptake in Chinese demand. So, to me, I think it's just a sort of a longer-term secular bull story as energy is now becoming, as I said, a matter of national security rather than just simply an economic good, and therefore Halliburton really is a primary player in this space that helps countries all across the world do much better energy exploration.
Oh, sure. And everything you said about the China offset, we'll explore more later on, where people are really looking to that potential. Pippa, for now, thank you. Our Pippa Stevens. Let's turn now to the home building sector. Housing, everybody knows what a problem this has been. If you take the sector as a whole, we've been largely range-bound over the past year, which is kind of impressive considering the collapse we've had in home sales and falling prices as well. We turn to Diana Olick for the story. Diana?
Well, Kelly, in this report, I think we have to be laser focused on mortgage rates, because remember, in this recent run up in rates, the peak was at the end of October when the 30-year fixed went over 7%. Then throughout November and December, that rate came steadily down and sharply down in December. So that's going to be factored into this quarterly report, especially. We want to see the commentary on that. And remember, D.R. Horton is the largest home builder in the nation by volume, but they also have that special Express Homes brand, which is an entry-level brand. Now, a lot of the home builders have been doing incentives like buying down mortgage rates and reporting that they're adding all sorts of extra amenities. But D.R. Horton can't really do that in that Express Brands level because it's already so low. So we want to see if this lower mortgage rate is going to factor into the new orders, which we expect to be down, but how far down? And then, of course, we did see home builder sentiment improve in January, again, because of those lower mortgage rates. But one more thing I think we have to watch is cancellation rates. They have been sky high recently for the builders. Are they starting to come down now as mortgage rates come back? All factors to watch, Kelly.
And Boris, you're not necessarily jumping onto this trade. I mean, the sector's made a big move off of those October lows Diana was talking about.
That's really the reason why I'm so hesitant. It's not that I don't like the story long term, and D.H. Horton is obviously, I think, the bellwether in the segment, and actually its share of the total homes built continues to grow. So it really continues to just simply grab market share. So if you're a long term investor, I think it's a very strong story. It's just that the stock has bounced so much off the November lows that I think it's gotten a little bit too far ahead of itself. Yes, mortgage rates have come down, but we still have the Fed that is tightening. You just guys talked about the fact that the Fed may tighten too much, and that's obviously hangs over D.H. Horton, I think, as far as demand goes forward. I love the stock sort of long term. I think it's probably a much better candidate as a put sale. You can sell the 95s 3 months out, and get a very decent cost entry position. And if they expire worthless, you get like 20% annualized return. So to me, it's sort of a safer bet to maybe do that rather than just simply buy the underlying right now.
Sure. Bless you, Diana. And by the way, 10 times forward, we have a double-digit PE on a home building stock, and now I don't like it. Now, that's making me nervous.
The problem with home building stocks is you really can't look at them in valuation. They trade much more on momentum and sentiment than valuation. So you can't, you have to take that much more into account than the valuation figures.
All right. There it is on your screens. Thank you both. We appreciate it. Boris, stick around. Diana, we'll let you go as we turn our attention to Johnson & Johnson. The CEO made some cautious comments about the macro outlook just a week ago. So should we be braced for more bad news? Meg Terrell has more. Hi, Meg.
Hey, Kelly. Well, those comments which were made at the JP Morgan Healthcare Conference really caught the attention of a lot of analysts. And there is a debate going about where J&J's 2023 guidance is going to come in because of that cautious outlook that the CEO, Joaquin Duato, really outlined in terms of things like inflation, pricing pressure, things going on in China in terms of COVID and their drug pricing policies, austerity measures in Europe, all of that. So we're really going to be watching the 2023 guidance very closely. Of course, the company is also in the midst of spinning off its consumer unit. That's all those well-known brands like Listerine and Tylenol and Band-Aids. What's going to remain are medical devices and the pharmaceuticals unit. Those are expected to continue to see pretty good growth, continued recovery for medical devices from when people were not getting these procedures done during the pandemic. Pharma expected to do well. Closely watched will be the COVID vaccine. The commentary around that is J&J has largely de-emphasized it, and there's been reports they've stopped manufacturing it or at least cut that back significantly. So that'll be something to watch really closely as well. And then finally, we did mention that consumer unit. They are spinning that out, but there's been all those shortages of things like Tylenol and Motrin. So what's happening with that business now as the flu season and RSV and COVID have all come at the same time and made that really challenging?
Exactly. Kelly?